Well, hello, everyone, and welcome to the Benjamin Z. Miller Investor Networking Group. It is so great to see everyone here today, and we have such an important topic today. This is just a really great topic, and it's an area of investing that a lot of investors may not be super familiar with, but that just leaves more profits for those that understand it. We're going to be talking today about mezzanine debt, mezzanine lending. And what this is it is a type of loan that actually it is used in business acquisitions and it's also used in the multifamily space sometimes. These are loans that can pay really, really high rates of interest. So if you loan money on a mezzanine deal, you can make a bunch of passive income. You can make a lot of money. But let's start out just so I kind of know where everybody's at. Who here has heard of mezzanine lending? Have you heard of mezzanine lending, Josh? Are you familiar with this at all?
No, I haven't heard of it before.
Okay. And what about you, Shelton? Have you heard of it before?
Brought up a few times in conversation. I feel like I learned a little bit about it last weekend.
Okay, good deal. And then I know, Mark, you have you've got quite a bit of experience in this area. Mark, what's kind of your situation with it? What do you basically they make the statement that mezzanine lending is like loan sharking. I don't know if you've ever heard people accuse you of being a loan shark, Mark. What would you say about mezzanine lending? Kind of your experience on it.
Well, Ben, I haven't seen any fins growing on me, so I don't think I'm a loan shark. But I have done several mezzanine lending deals and whatnot. It is a great way to help businesses and startups have capital that they otherwise wouldn't get access to. And I mean, the last mezzanine deal that I'm at was at about 16%. It's paid monthly and whatnot, and it really helped the business go to the next level while they were basically waiting to get additional mezzanine / subordinate debt and whatnot. So it's like I said, it can be a great way to make great income, because it's hard to find 16%, and you've got, you usually get like a piece of a stake in the company or a stake in the asset. If you're protecting a physical asset, like if you're protecting a real estate asset, you'll usually be secured with a lien and whatnot. But yeah, it's a great way to provide capital and whatnot, and make money and whatnot. And even if you don't, as you were saying, there's great ways to make money even if you don't have the money.
So you don't look at it as loan sharking. You look at it as a way to help a business, right?
Yeah.
I love it, Mark. I love it. Okay, very good. Well, that's amazing. 16%. Can you imagine that, folks? A 16% passive rate of income on a loan. That is just amazing in terms of a return, and we'll go through how that works in these other slides. So, but first I want to put in a story where you can see, because a lot of times people that are new to mezzanine lending, they don't quite understand how it works. And they're like, well, that sounds great. A big 16% rate of interest, or 12%, or an 18% sounds good. But actually, the interest is the icing on the cake. The cake is if you're a mezzanine lender and you end up getting the asset. So let's take an example here. And this is an example that is meant to illustrate. So there's a mezzanine lender, for example, named Robert, and he has provided an entrepreneur named John a $300,000 loan to renovate an apartment complex. So John is an apartment investor, and he's going to renovate this. And John signed the documents and said, okay, I'll make payments. And John, he went 35 months paying that 16% or that 18% or that 12%. And then all of a sudden, John got into a nasty divorce. And we all know what can happen in those nasty divorces. And it caused all sorts of chaos in his life. He was making payments before, but then during the divorce, he couldn't keep up with the payments. And Robert, the lender, he swooped in. He swooped in like a falcon, and he took over the apartment community. He finished out the renovations, and he also attracted some high-end tenants. And then over the next 5 years, the value increased, and Robert actually sold it where he made a profit of 1.4 million, but he also for 35 months got payments of 16% on this deal. So there's definitely some big upsides to being a mezzanine lender. It's not just the interest. It is not just the interest. And mezzanine lending is a gold mine. It's an absolute gold mine. You know, they talk about these payday lenders making a lot of money. The good mezzanine lenders will absolutely make more money than a payday lender, because a payday lender is largely dealing in trinkets, you know, an item that's a cheap item, and they're making a high rate of interest. But with this, it's secured by real assets. It's a major win. So what exactly is it? What does this mean, mezzanine lending? Well, it's a form of hybrid financing. So it combines elements of debt and equity. So let's talk about debt. You're all familiar with how, you know, you get a loan from a bank, you get a loan from a hard money lender, you get a loan from a private lender, and that is called senior debt. And senior debt is normally at about 65% of the asset value, maybe up to 85%, and senior debt has a lower rate of interest. It might have an interest rate that's, for example, between 4 and 8%. Now, the reason that's good is it's super safe, because if you don't get paid, you've got a huge upside on it, but it's not going to make you as much money as being a mezzanine lender. If you position yourself as a mezzanine lender, you can be making 15%. 12%, 15%, 16%, even 18%. There's really no limit to how much you can make if you position yourself as a mezzanine lender. But the trick to it is you have to understand what it is and how it works. And basically what happens is, as you go up higher on that capital stack, the loan to value increases, where the sponsor, that's the one that basically put the deal together. That's the real estate investor, or that's the guy that's buying a business with an acquisition loan. They're called the sponsor. And the sponsor, and sometimes the seller, they contribute equity. They contribute equity to the deal. But those rates of returns, they go higher and higher. But the sweet spot is really that mezzanine lending, because you are going to make a lot more than the boring senior debt lender, you know, because getting a 4% interest rate, you're not going to be able to do very much with a 4% rate of interest. But if you can get a 16%, an 18%, now you're cooking with gas. So how are these deals done? Well, there's two categories that you're going to see them often in, and there's other categories. It's not just these two, but you often will find them in business acquisition loans, and you also will find them in multifamily acquisition loans. But these are certainly not the only places where you can find them. But those are two good examples of where you might see this sort of thing. So somebody's going to be purchasing an apartment community, someone's going to be purchasing a business. These sorts of loans can come into play. Now, this illustration here, it's approximate. It's not an exact thing. You know, it varies a little bit, but it kind of gives you an idea of how it might work. So maybe the capital stack, you know, let's say that the asset costs $1 million. Imagine the asset costs $1 million. Well, 65% of $1 million, or 650,000, might be borrowed at between a 4 and an 8% rate of interest. Then you've got the kind of the preferred equity. Now you're getting into that mezzanine lending area, where you may see that percentage could be 6, 12%. And if you get a little bit up above that, then you're definitely in the mezzanine area where you may start getting returns that are 12%, 15%, 18%. And then finally, the other 20%, that's going to come from either the sponsor or the seller. You know, a lot of times the seller will contribute equity to a deal. So that is something where you've got increasing risk as you go up, but you're still in a good position. So how much can one make as a mezzanine lender? So let's take an imaginary loan here, and you've got a mezzanine banker rate. They're loaning money at 18%, and they're going to loan, for example, $1 million. So the annual interest rate is going to be 180,000. And let's say that loan runs for 5 years. So during that 5 years, 180,000 times 5 is $900,000 that's paid out. And if it was a bank, compare it to a senior banker, a bank rate, which is a much lower rate of interest, let's say 6%, they might get 60,000 a year. But look at that, the mezzanine lender is getting 3 times as much interest. And it's also for a 5-year term. So you can see that the mezzanine lender is the one that's making all of the money on the deal. So that is the key thing to understand about it. So that sounds good. You may be thinking, well, that sounds good, but how can I do this if I don't have $1 million? How can I get in the mezzanine lending game? You're probably saying, I like the idea of making a lot of money, but how can I do that? Well, you can go to a lot of different mezzanine lenders, and they're always looking for people that can find deals. Really, the hard part is finding a worthy deal. That's the trick to it, is finding a good deal. When I pay brokers, I offer 3%. That's kind of the normal thing that I do. But I also have a junior broker program where if somebody wants to help, they can earn 2% as a junior broker. So that's something where they're basically just making the introduction, and then I talk to the actual lender. But there's a lot of possibilities there, and brokering can be profitable, because if you get involved with brokering, you could, on $1 million loan, you could make 30,000 and you wouldn't have to use any of your own money. So it's definitely something that's appealing. So now the question that we sometimes get is, should mezzanine loans be in my portfolio? Well, good question, folks. Good question. Folks, if you've got a portfolio and you don't have any mezzanine loans, you are cheating yourself. You are losing out on one of the most powerful sources of secured passive income available. Now, why didn't your stockbroker tell you that? I bet he didn't even talk about mezzanine lending as a source of passive income. He wanted to sell you some bonds. Well, folks, this is something here that is powerful, and it runs circles around what you can find on a bond. A normal bond's not going to pay you 16% or 18%. And it's also not going to be something that's secured by actual real estate. See, because the beauty of these mezzanine loans, and we'll talk about it in a minute, is how they are secured, because it's not an unsecured loan. That is what makes it such a payday, because you remember the example of John and Robert, how Robert ended up making 1.4 million on that deal. Well, that is something that can happen there for these mezzanine lenders. So it's really an excellent thing. So what about the legal paperwork? What kind of legal paperwork is involved? Well, there's 2 main documents. The first one is a pledge of partnership interest. Let me explain what that is. Normally, an asset is when somebody buys an asset, they're usually taking title to it with maybe they're using a limited liability company. That's a common way to take title to an asset, to put the asset in a holding company. So the asset would go in what's called a holding company. And the holding company owns 100% of the asset. But the actual ownership of that holding company, it could be 1 investor, it could be 10 investors. It's however the deal was put together. But the ownership of that holding company has the asset. And there's a pledge, there's a pledge of partnership interest where every partner where the people that are involved with the deal, they sign off that, okay, we understand that there's going to be a mezzanine loan, and we understand that if the mezzanine loan is not paid, we lose the asset. They can lose the entire asset, and that's what makes it so powerful, because they want that money, they need that money, and that's where a mezzanine lender makes their money. They are able to actually offer these loans, and the way it works is ownership of the holding company that they are pledging. So they're saying, loan us the money, we'll pay you, Mr. Mezzanine Lender. And if we don't pay you, you can have our holding company that owns the asset, and you can step in as us and take the deal over. So there's a second document that's called an intercreditor agreement, And this document, what it actually is it's saying that the mezzanine lender has the legal authority to step in to that deal. So the mezzanine lender can step in and start making payments to the first lien lender. So it is really important to have all of these documents. But mezzanine lenders, they will provide those, or if you're dealing with a real experienced borrower, they will provide those for you, so you can review them to make sure they're always there. But you want to make sure that there's everything is done correctly in terms of the paperwork. It is so important, folks. Okay, so now let's talk in more detail about an intercreditor agreement, because this is such an important topic, such an important concept. An intercreditor agreement is actually an agreement that is between one or more creditors, because you may have one creditor that's the first lien lender. Okay, they're a creditor. The bank is a creditor. If the bank has a mortgage, the bank's a creditor. Then there's the mezzanine lender, who also is a creditor, and it basically outlines the priorities. And what that's going to say is going to say the bank gets paid first, normally, because normally the bank's in a first lien position. But then this basically spells everything out in terms of if there are multiple loans that are involved, it covers everything there. That shows who gets paid what, when, etc. So it's very good. Okay, that is the basic concept. I'm going to mention a couple of announcements, and then I'll take questions. So I want to remind everyone to please fill out the sign-in sheet. I think everybody that's here today already is on the list, so I don't think you have to do anything today. But if anything has changed with your information, please fill it out. And then I want to remind everyone as well that you are welcome to invite your friends, your business partners, different people to these meetings, because that helps us as a group. Because the more quality people that we bring here, the easier it is for people to do deals and to make new business contacts. So that is a benefit to you, and it's a benefit to the group, and the group thanks you when you invite new people. It's great if they're an uber experienced investor where they already are really far along and they know a lot, but new investors are also welcome. Come one, come all. Everybody's welcome at the Benjamin Z. Miller Investor Networking Group. And then I also want to mention that I am available for mentoring. So if you see this video on the internet, maybe you're watching a recorded version of this video, that means you. If you're out there on the internet and you think, I'd really like to learn how to do some of this stuff. I wish I had somebody that could work with me closely one-on-one. Well, folks, it is your lucky day. Just take action and reach out to me. And we can get you started on a complete mentoring program where you can rapidly learn how to invest and increase your skills. So that is it for the presentation. I'm going to go ahead and take questions. I'm going to stop the recording now, and I'll be happy to take any questions.